the number of people that had passports in the US in the 1990s, and you compare that to the number of US citizens that have passports today, it's quite significantly different. I don't think that's unique to the US. I think that's much more broadly speaking. People are becoming more globally minded in their orientation. And I think that as time progresses and as the geopolitics starts to evolve, emerging markets are going to start playing much more of an important role in the global landscape.
Hello and welcome to the INSEAD Emerging Markets Podcast, where we interview business leaders and emerging market experts on business innovations, market opportunities, and macro-level trends in emerging and frontier market countries. Join us for the next hour to dive deep into the world of emerging markets as we speak with top performers who are successfully investing, working, and living in these markets themselves. Welcome to the INSEAD Emerging Markets Podcast. I'm your host, Nick Lall, and today I am joined by Altesh Baijoo, who is Managing Director at Flow 48 and Founder and Director of Insaaph Capital. Altesh brings a wealth of entrepreneurial experience, having spent many years at the forefront of South Africa's business landscape, founding the Cape Town Stock Exchange, along with many other ventures. Today, he leads two innovative companies, Flow 48, which provides tech-driven working capital solutions to SMEs in emerging markets, and Insaaph Capital, where he's building a cutting-edge platform to create tokenized access to global public and private markets. Altesh is also an INSEAD alumnus, having completed his Master in Finance a couple of years ago. Altesh, it's great to have you on the podcast. There's so much we could talk about, including your current ventures and your background. But just in the interest of time, maybe we could get started with a brief overview of how you became so entrepreneurial. I know that you actually spent many years in a much more traditional route. So would love to hear a little bit about that first transition you made when you realized that you wanted to be an entrepreneur, and what influences may have led you to make that choice from where you were before.
Great. Nick, thank you so much for making the time and for inviting me as a speaker. Really appreciate it. Yeah, I'm looking forward to the rest of the conversation. In terms of your question itself, as you rightly point out, I initially cut my teeth in terms of business in a fairly traditional environment, which is the FMCG environment, having worked for global FMCG companies as well as multinational FMCG company that's based in South Africa. And through that, especially in the initial company, I was tasked with doing a project where it was treated like an entrepreneurial venture within the corporate itself. So it's kind of like corporate entrepreneurship. We were given a budget, given a team. We reported directly to the board of the corporate, and we were tasked with finding alternative sources of revenue for core business itself. And it was very much an entrepreneurial venture. At that point in time, I didn't have a lot of exposure to entrepreneurship, so it was very much learning as we progressed in terms of what is this thing called entrepreneurship and how do you build a business. And that planted the seeds for exploring much more broadly everything that I've done subsequently. I mean, the venture was successful in the sense that we had identified a number of products, but a lot of those products were placed back into the shelf and eventually got absorbed back into the corporate environment. So I basically got back to doing the business of corporate itself. But the seed was planted, and I was very keen to actually explore further. And especially given my other interests within finance and so on, I really wanted to get to nurture that seed even more. So that was initially the seed. So it was kind of getting exposure in a corporate environment to entrepreneurship.
I think that's a good way a lot of people start out, being an intrapreneur, working within that sort of corporate venture environment, and then that gives them confidence maybe to go out and do something on their own. I guess moving on to what you're working on now, I'd love to learn a little bit more about Insaaph. What pain point did you see that you wanted to solve? I think there's a lot going on in DeFi these days and crypto, but I think that, as with any type of technology, it's always useful just to kind of understand the business case for it, and what's the reason that you felt like this was something that needed to be solved and your solution could solve it.
Yeah, sure. So after stepping out of corporate, I was very lucky to be able to enter the finance space. Moving from FMCG into finance is not an easy transition, but I was very lucky to step into the finance space to work in a business that was a marketplace lending business / peer-to-peer lender. And it was backed by one of the big banks in South Africa itself. And it was a bit of a baptism of fire in terms of finance specifically. And I got to handle an aspect of that business where we looked at specifically the regulatory component in terms of making what we were doing and issuing debt, but making it accessible to a broader base of retail investors through fractionalization. And it was quite a laborious process in terms of it was predominantly legally driven. So it was around conceptualizing structures that made it possible for retail investors to take fractional participation in the debt issuance that we were doing. And that gave me a fairly unique set of capabilities in terms of understanding how to do that both within compliance of things like the Banks Act and the Collective Investment Scheme. But it was quite intensive, knowledge intensive in terms of how to get that right. And then I started to get exposure to blockchain and tokenization. And inherently in those technologies, as well as tokenization, everything that we were doing from a fractionalization point of view in the debt issuance side of the business, I realized was embedded in the technology of blockchain and tokenization. And when I started to look more broadly around the ability to create wealth and how things had changed more broadly in terms of public markets and private markets, fractionalization together with access to a broader base of asset classes just made 100% sense in terms of giving that value proposition and making it more broadly accessible, especially in developing markets where people are limited in terms of what they have access to create wealth. So it was a bit of what I'd learned, as well as an intersection of where the technology is and what the technology was capable of.
Sure. It definitely is an area that there's so much room for growth there and opportunity. Your last point that it is especially useful in developing or emerging markets. I was wondering if you could speak a little bit more to that and why it is so necessary and useful for those who want to build wealth in an emerging market country, and why it may be even more useful for them, and maybe just kind of walk through the user journey and why this is solving something for them that they might not have at this point.
Yeah, sure. So when we started to look at it, firstly, what we did was we looked at it at a very broad global macro perspective, and we tried to understand what is happening across capital markets globally. And what we started to realize, and I mean, this is fairly common knowledge now. I don't think it's broad-based common knowledge, but especially within the finance space, it's fairly common knowledge in the sense that companies are staying private for longer. And the reason for that is the private markets have developed quite significantly. There's a lot of access to capital. But what that's done is it's made previously accessible companies that are very high growth, potentially good returns, now inaccessible to retail investors. Now, that's in fairly sophisticated markets like the US itself. And it makes it even more challenging if you start to look at developing markets where you don't have access to high growth companies and so on. But that point started to drive home fairly an important agenda for us in the sense that in developing markets, there's an issue in the sense of what do I have access to? And then when you couple that to the change that's happened between public and private markets, it compounds the issue in terms of access to wealth creation opportunities. And I'll make that fairly simple and give you an example, and a real life example. If I speak to people in South Africa, for example, most people have access to potentially companies in the JSE. They don't really look at investments beyond the JSE. It's very difficult to do an investment beyond the JSE, beyond the borders of South Africa itself. But when you look at wealth creation, if you're going to focus purely trying to invest on just JSE listed companies, you're not getting the best access to the best wealth creation in the world. Right. And we wanted to change that. We wanted to make it available to everybody. And when you look at it today, like some of the most sophisticated investors in the world, they have investments across asset classes. Now, if you're limited to just JSE listed companies in a country, you're definitely not getting access to some of the best opportunities in the world itself. And what we wanted to do was we wanted to say, okay, cool. How do we build something that makes it very, very easy for you to be able to access these opportunities as a single destination and on a single platform itself? So you could come onto the platform and say, okay, I want to build a basket of investments, and that basket could be real estate and real estate from anywhere in the world, or any of the asset classes itself, and make that very easy for you to execute on.
Amazing. Yeah, I think that as other guests we've had on who talk about emerging market stock investing, there are so many opportunities in these countries that are not listed on stock exchanges. And I mean, it's also just true all over the world that people are trying to democratize private market investing. And so solutions towards that are always very welcome. I guess my question would be, are most of your clients just individual investors who are downloading your app and using it on their phone, or is it more a solution for wealth managers? Who's this targeted to?
Very good question. Initially, when we started to build, we needed to prove to VCs as well as the people that we're going to raise money from in terms of building the business that we have competence in terms of building on the blockchain as well as doing tokenization itself. And the easiest way to do that for us in terms of an early stage business was to basically digitize the crypto asset class, because everything's already digital. It was easier to do. So our first product was a crypto index product, and we marketed that predominantly to retail investors. That product was launched in March of 2022. So it's got a really good track record now. It's about an 880-day track record. And it's predominantly retail investors that we kind of built the MVP on. We started to scale the MVP out. But where we are now today And there's been a series of developments within the TradeFi as well as the DeFi space itself, but more so in the TradeFi space and the adoption of the crypto asset class. What you're starting to see, especially in a country like South Africa and other similar jurisdictions where the regulators are taking a very favorable position towards crypto, you're starting to see a lot of demand from the traditional universe coming online for the crypto asset class itself. And the crypto index product is actually quite a nice product because it gives you exposure to the broader crypto asset class as opposed to you having to do all the research yourself and try to figure out what assets within the crypto asset class to focus on. So where we are today is it's been predominantly retail investors. We've got about 6,400 retail investors registered on the platform and active on the platform. And we now just built out our APIs. And what we want to start to do is we want to start to tap that demand that's coming online from asset managers, independent financial advisors, and so on. So we're going to basically be launching our B2B product.
Amazing. Best of luck with it. I'm wondering if you could talk a little bit about the differences between Insaaph and any other platforms that are trying to do the same thing that you are. What are the technological innovations that set you apart from other fund management platforms, especially the legacy ones, but even others that may be competing with you as well? What are the main differences between Insaaph and other discretionary fund management platforms?
Yeah, sure. I think that when you look at technology within the traditional asset management space or the incumbent asset management space, they're fairly sophisticated in terms of their use of technology, but technology is viewed as an OPEX line item for most asset managers. And it's very different for us. Today, for us, it's a CapEx. It's CapEx, and it's very central to us. In terms of the usability and the feature access that is provided to investors that sign up, especially retail investors, it's fairly nascent, right? So what we want to do is we want to change that. Number one is we're building on the latest technology, which is blockchain, and that inherently gives you significant advantages already, albeit that a lot of those advantages will take time to realize. Things like instantaneous settlement. You don't need the amount of intermediation that you do need in the traditional space itself. But those things will take time to come online. Where we see the true advantage is just in terms of what you can enable investors that are participating on the platform to be able to do. Like today, if I go on and let's just say I buy a product from one of the big investment asset managers in the country or anywhere in the world, it's fairly rudimentary in terms of what they offer you. You basically log in, you can execute a transaction, and you just basically see your balance and how your investment is performing. Whereas with what we're doing, you can build a whole lot of functionality and capabilities in terms of what you can do with your investment, how you can leverage your investment in terms of increasing its ability to earn additional returns and so on. So putting technology at the core and not treating it as just an OPEX is a fundamentally different way of approaching it than the traditional incumbent asset managers are at the moment.
Yeah, I think that's definitely a huge difference between legacy and should lead to better product as well, better returns. Switching over to Flow 48, I was wondering if you could talk a bit about the work you're doing there. I think I'd love to also just learn more about how you balance all of the work leading to companies like that. But regarding Flow 48, maybe you could just tell a little bit about what the company does, how you work with SMEs across emerging markets, and what the solution there is. Would love to hear more about that as well.
Yeah, sure. So Flow 48 is also a fintech business. I'm just part of the business. It was founded by a very competent team. It was initially started off in Dubai around 2021. Did a pilot basically doing working capital loans to SMEs in the UAE. We started off with two products. One was a revenue-based finance product and the other was an invoice-based finance product. We did a pilot, scaled it out really, really nicely. The performance of the loan portfolio through the pilot was phenomenal. We had a 0% default rate, really good returns in terms of the portfolio itself. And that set us up really, really nicely to do a seed round and a pre-series A. We concluded a pre-series A in November 2023. That is a $25 million round, combination of equity and debt. And then we took a decision to basically launch in South Africa because of the sophisticated nature of SME lending by fintechs in South Africa itself. But essentially, Flow 48, it's much further down the line in terms of where it is from a stage of business than Insaaph Capital is. It's got a bigger team, better funded, and the core proposition there is doing working capital loans to SMEs in the various jurisdictions that are currently operational in, which is UAE and South Africa.
Amazing. And I know that's really needed. I've been myself looking at acquiring small businesses in a lot of these emerging market countries, and it is a challenge there that it's not as accessible as it would be in a developed market, and working capital is definitely needed for any of these businesses if they're trying to grow or even just stay alive. And so it is a very needed proposition. I was wondering if you could, again, maybe talk about the technology behind Flow 48 and what sets it apart from legacy solutions and why that makes it an emerging market country than what.
Yeah, sure. So from a technology point of view, in terms of our underwriting decisions, in terms of just setting it apart, underwriting a credit decision for an SME is very different to underwriting a decision on a more established business itself because of volatility of revenue and all the different aspects, the asynchronous information from an SME perspective. And this is why it's become so challenging for banks, for example, to lend into the space. And that's why it's so underserviced. And over the years, I think fintech and lending into SME is probably just over a decade or more now old. And it's starting to get really mature and really sophisticated. And what you're starting to see is more data points becoming available. And you're also starting to see it's not just your financial metrics. Key insight from a Flow 48 perspective is how do we use your traditional financial metrics and financial data to underwrite, but at the same point in time, how do you utilize alternative sources of data that actually have very good predictive capability in order to inform the underwriting decision? And things like, for example, logistics data, e-commerce sales data, advertising performance data, ERP type of data as well. These are all much more robust alternative sources of data in terms of being able to give you a very good indicative understanding of what the financial performance forward is going to be for a business and to base your underwriting decision on that. And I think together with the overall, call it evolution and growth of things like API capabilities and so on, and just the broader technology infrastructure itself. I'll give you an example. 7 years ago, when we were doing SME lending in South Africa, you didn't really have very deep capabilities in terms of API integrations. Whereas today, you have specialists in terms of that value chain from an SME lending perspective that are basically building super APIs that plug into various different data sources that you can then plug into instead of having to do the integrations into multiple different providers. And that just demonstrates the evolution and the level of sophistication that you're dealing with now in terms of being able to leverage data and technology to better inform your underwriting decisions.
Yeah, it's really amazing. One of our recent guests, Sasha Mehta, she was also talking about how the quality and quantity of data that exists across the world now has just made investing in emerging markets so much easier. And I think for underwriting, it makes sense as well that a lot of these countries, the businesses and the people are using technology even more than in the developed markets. And technology just gives you so much data that what 10, 15, 20 years ago, people would have thought emerging market businesses are somewhat opaque and you can't trust the financials, but there really is so much that you can go off now that's probably even more accurate. So it's really interesting that solutions like this are enabled that way. I was wondering if you could talk a little bit more about the ultimate vision of Flow 48 and why the focus on emerging markets and what are the biggest differences in lending between emerging markets and developed markets.
Sure. So I think why developing in emerging markets specifically and emerging markets particularly, it's because when you look at the SME funding gap across emerging markets, it's very consistent that it's a problem everywhere, especially across emerging markets. And there's various statistics that point to that. In South Africa, for example, the funding gap is assumed to be probably about $80 billion. So it's quite significant, albeit that there are a number of alternative lenders in South Africa that are utilizing technology already. And that's been the case for about 5 to 7 years, perhaps, right? Whereas in the UAE, it's fairly nascent, but it's starting to grow fairly significantly as well. But it's a similar issue. Banks don't lend into the space. There are some alternative lenders, but generally speaking, SMEs struggle to access capital in terms of being able to fulfill their growth aspirations. So that's a fairly consistent problem across emerging markets. And when you look at it from a commercial value proposition point of view, so, when you're raising capital from VCs and so on, one of the things you've got to do is, are you going to be able to grow a business? And is it going to be commercially feasible to generate returns for your investors? So the question is, can you do this in a manner that generates returns for investors at the same point in time, serving a need and solving a problem? And the answer is unequivocally, absolutely yes. When you look at it, one of the key challenges that I think exist across emerging markets, but you started to see them at different stages, is you have a pricing inconsistency. I still think to a large extent right now, the way loans are priced to SMEs, there's a huge amount of price arbitrage. And what I mean by that is, as an SME, for example, and I'll use South Africa as an example, but the same thing is consistent in the UAE. If I go to lender one, and the risk of my business has not changed, and lender one is happy to provide a loan to us, they're going to charge me a rate of X, right? And let's just say that's 1% or 2% per month. If I go to lender 2, nothing in my business has changed. It's exactly the same profile that I'm sending to lender 2. Lender 2 also is comfortable to take a decision and lend me the capital, but lender 2, instead of charging me either 1 or 2%, wants to charge me 3 or 4%. It's the same profile of business. So there is still largely a pricing inconsistency in the market itself. And I think as the market becomes more sophisticated, more players and more data, you'll start to see pricing become more transparent. And I think that pricing will become better. But right now, pricing is still a big issue in the market itself.
Sure. Always good to take advantage of those huge arbitrage opportunities. Switching a little over to yourself, I'm just curious. I mean, these both seem like very time-consuming, ambitious ventures. So I was wondering how you split your time between the two projects, how you prioritize your time. I think a lot of people would want to learn how to be able to get so much done like you do.
Yeah, so I think the first and very important aspect is transparency around what it is that I've been involved in. You know, when I had the conversation with the Flow 48 guys, I was very transparent in terms of this Insaaph Capital is something that I've started, and it's very important to me, and I really want to build it out. And if there's a possibility for me to be able to do it and find the time and carve out a governance structure that works such that, you know, it's very clear what my time allocation and what my output would be for Flow 48. And then having the conversation with my co-founder on an Insaaph Capital perspective, and basically, you know, coming to an understanding of why it is that I need to be involved in Flow 48 itself. So the transparency, and it's so important to have those discussions to basically demarcate what the boundaries are in terms of your involvement in the different businesses. And it's actually quite challenging to have those conversations. And, you know, as you start to have those conversations, you realize just how complex it is in terms of being able to carve out what is my allocation here, what does that look like in Flow 48, and what does that look like for Insaaph Capital. Fortunately, I have very level-headed, very rational teammates, as well as co-founders and people that I work with, and people that have actually supported me in terms of helping me define what that is. So from a day-to-day perspective, the bulk of my time during the day is allocated to Flow 48, and that's fairly easy. There's a good contract that kind of defines that and governs that. There's good incentive structures in place in terms of my participation in Flow 48. And then essentially my time as allocated to Insaaph Capital is more on the periphery. But if there's something that I need to focus on for Insaaph Capital, and if I have the conversations transparently with the guys at Flow 48, there's an accommodation from that perspective. But yeah, it's just about basically making sure that your priorities are understood, being transparent about that, and making sure that there's a consistent level of transparency and open communication.
For sure, yeah. Being intentional, communicating a lot, and it seems like also when time is limited, it forces you to prioritize what's most important. But maybe a follow-up to that would be, do you have any personal core values, and how do those drive your business ventures?
Yeah, so I mean, I think there's definitely a code that kind of informs the way that we build. And what I find really rewarding at the moment is there's a lot of synergy between the code that is my personal code and both the businesses itself and the people within those businesses. And it's basically built on cultivation of trust, which I think is absolutely important. You know, it's actually quite precarious when you think about it, that even big multi-billion-dollar businesses comes down to just a handful of people that really have to work together to create value. And that value creation is influenced so much by the nuances in terms of interpersonal relationships. And for me, it's all about trust, you know. And the thing about trust is you've got to pitch up, and your character is the most important aspect in that. And, you know, you're going to make mistakes, you're going to mess up. And when you mess up, you've got to own up to it. You also have to be bold. You have to take decisions. Sometimes you're not going to be liked for the decisions that you take. You have to strike a fine balance in terms of being able to be bold and to make courageous decisions, but at the same point in time, doing it in a way that consistently cultivates trust and mutual respect. That is something that's super important. And I think that's shared in terms of all the people that I work with. And I feel very lucky to be able to experience that, because everybody contributes towards building that trust and that mutual respect. Nick, I'm not going to lie to you. Sometimes we get it wrong and we make big mistakes. And, you know, that's where the courage to have transparent, softer conversations comes into play. You have to be more vulnerable. So these are the values that become really, really important to me. And then I think the one thing as well is I think that historically, in terms of leadership, I quite like the idea of a competence hierarchy, in the sense that it shouldn't be a dominant hierarchy. It should definitely be a competence hierarchy. And I quite like the idea of technical people very strong, technical, capable people moving into leadership positions and leading other technically strong, capable people. And it's very different to how, for example, an MBA is taught, where you get generalists leading technical people. I do favor the whole technical leading technical. And I think that the results that you get out of that is very strong capabilities within the company itself and a very high level of expertise within the company itself.
Yeah, it's interesting. To your first point of trust, it's probably easier to build trust among the technical people if they see the person has the same skills that they have but are higher up than if an MBA comes in and tries to tell them what to do and they don't really understand the technical details. I can definitely see that can be an issue in some organizations, but I fully agree that trust and human relationships are what matters, no matter if you get things right or wrong in the long term. It's being around the right people is what generates success. One final question, I guess, would be why emerging markets? What's your passion for emerging markets?
That's such a good question. I think that the world as we know it is changing at such a rapid pace, right? And you based one of the biggest financial centers in the world, if not the biggest financial center in the world. But even the relevance of the US in terms of the global landscape is changing, right? I don't know what that's going to look like in 5 years, in 10 years, in 20 years, but change is at our doorstep and we can start to see how it's changing. And that's driven by a couple of big trends like demographics, number one. So if you look at the demographics of the developed countries and most Western countries, they have aging populations, whereas most emerging markets have much younger populations. The level of education is growing quite increasingly. The level of GDP per capita in those markets is growing. And the more important aspect is the growth of the future, when you look at it statistically, and if you look at which regions are going to start contributing to the growth of the next 50 to 100 years' time, it's predominantly going to be driven by emerging markets, right? And I think what you're going to start to see is you're going to see a different form of globalization in terms of, I think you're probably going to move more towards the ideal of a global society, more broadly based. There was a really interesting statistic was that if you looked at the number of people that had passports in the US in the 1990s, and you compare that to the number of US citizens that have passports today, it's quite significantly different. I don't think that's unique to the US. I think that's much more broadly speaking. People are becoming more globally minded in their orientation. And I think that as time progresses and as the geopolitics starts to evolve, emerging markets are going to start playing much more of an important role in the global landscape. You can already start to see that happening. And for us, I think we need to be able to figure out how to better serve those markets. And if we can do it within those markets, I suspect that it'll also be easier if we so choose to basically set up a presence in developed markets as well.
Definitely. Thank you so much for taking the time today, Altesh. It was extremely interesting and I love all of what you're doing. It's really great work. So I'd love to keep in touch, but thank you again for joining the podcast.
Thank you again for having me. I really appreciate it.
Thank you for joining us for this episode of the INSEAD Emerging Markets Podcast. To stay up to date on events we may be hosting, emerging market news, and to build your personal network, please feel free to join the INSEAD Alumni Emerging Markets Interest Group on LinkedIn.